Well, hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today we're talking EVs. I got 3 companies for you that I've talked about before, but each of them is at an interesting point with their price action, and they're ones that should grow very well for us over time. So stick around and let's get ready to rock. Welcome back. For those of you who are interested, down in the description you'll find a link to my Patreon. If you click that link and head over and sign up, you'll get access to my weekly newsletter, watch list. Also, I have my portfolios over there, my dividend, growth, and crypto portfolios. And that crypto one, oh my goodness, even growth has been really standing out recently. So, that's incredible to see that rotation come back to high growth, and I think that we're going to see a lot more of that. Moving on from there, my community of investors also participates in my private Discord that's over there. So they're positive, passionate people, super supportive people, very excited about finance and investing. So if that sounds like something that you're interested in, we'd absolutely love to have you over there as part of our growing community. So hopefully we get to see you there. Finally, down in the description we have NIO, that's one of the car companies. We have Webull and Moomoo. You can sign up, deposit your money, and then you get some free stocks. I get free stocks for the referral, so thank you ahead of time for that. Cover up those eyeballs, smash around until you find the like button, subscribe button, and notification bell that if you ring will show you any time that my videos come out on YouTube. And I'll tell you, there are some really good ones and some really great opportunities. So check them out. With all that said, let's get on to the stocks. Alright, so the first company that I have for you is XPeng, and so when we check it out, you can see the recent price action. Let's zoom out to see even more of it. So this thing actually went up over $75 per share. I'm sorry, not over 75, almost to $75 per share. And this, I had my initial position, I don't even remember what my cost basis was. It was well under $70 per share, but it definitely more than doubled in a very quick amount of time. And so when that happened, I did sell my initial position, but then as through this sell-off and stuff, I did dollar cost average. I definitely missed the bottom, what was in here, that when I saw this dip, that I went in fairly aggressively, and then we got a little bit more of a sell-off, and so finally we're right around my most recent cost basis on XPeng. Let's zoom into this recent price action. So stepping up, this thing was down to just under $23 per share back on May the 13th, and since then has established lows around $33 per share. So that's still 50% up. Even if we go to the more recent lows that we have over here, that's still, like I said, about 50% up from those May 13th lows. And then from there, we've caught on to another about 20% or so of value to bring us up almost to $40 per share. We actually did peak above it just for a little bit, $40.20 in yesterday's market, but by the close we were back down to $39.39. XPeng, just like many of the other top EVs that we have out there, are serious growers, that they are ramping up production. Microchip shortage news is actually getting very, very good from where we're at right now. It's actually, talk about the microchip companies that we have out there, the growth that they've experienced and the demand for their products is something that eventually that supply is going to saturate the market, and we're thinking second half of 2022 is when we start to see that saturation of the chips start to hit the market, and by then we should have a lot of supply chain issues smoothed out, ironed out, and that should really open up the floodgates for the EVs to enter the market. And we have some companies that are already very well positioned. XPeng happens to be one of them, coming out of China, and I got a little bit of recent news for you. So, Tesla, that might be another one of them. So when we look here, this is in Yahoo Finance, and this comes from today. So this is October the 15th, and it talks about XPeng publishes inaugural event, inaugural environmental, social, and governance, so ESG report. And I don't know if you know about ESG, but these are huge plays that we have right now, especially the environmental. The green movement itself is huge. So when we go down to the news that we have, it turns out that XPeng is actually one of the top companies, has one of the highest ratings that we have for ESG. So when you look down here, it says the company's leadership in ESG is recognized globally. So that in and of itself is going to drive people who, and there's a lot of people, it's worldwide, the green movement that we have, that's going to turn heads towards XPeng, knowing that they are such a green company compared to everyone else. So for them, they have research from the notably MSCI ESG research, scored 10 and 9.1 in categories, product, carbon footprint, and opportunities in clean tech, and it says 2 of the key areas that contribute to ESG ratings. And when you look at the average for the industry, it's 7 down to and 5.5. So they are well ahead of other companies. And not only that, so the ESG thing is all good. However, they are also a very strong growing company that we see, and so what you see for the high valuation is a lot of fundamental value that's priced in. Just remember that right now a lot of Chinese stocks are currently down from what they should be, and EV is even an area of the markets that is also still, well, finally back on the rise. So I think that it's only a matter of time before we see XPeng retake some of those prices that it previously had. It should easily be in that mid 40s, possibly even into high 40s by the end of 2021. We'll see what sort of strength comes back to EV. If we get another EV rally, or even if we're looking at clean energy rally, XPeng could look to capitalize in both of those areas. Not to mention the strength coming back to the markets in China could also be a thing that could also really be a driver for XPeng from where we're currently at. If you look at the tip ranks analyst estimate for XPeng, it's coming in at $56.40, and we are still under 40 for XPeng. So we have a 43% upside from its closing price of $39.39. So to me, absolutely excellent opportunity that we have with XPeng. So if we move from there on to NIO, NIO I believe has even greater value. So when you look at NIO, they have stuck pretty well around the middle, around the mid 30s for a while. So we had some volatility where we dipped below, we got to rise above for a little bit. As a matter of fact, we went back up over $50 per share for a little while. And then, well, we have supply chain issues. We have FUD going on in China itself. We also had a lot of stuff going on with debt ceiling, which has been pushed back to December. So we have a while to work on that one. And we just see a little bit of muted progress coming out of NIO. They did just recently have a record-setting quarter for deliveries and a record-setting month for deliveries, and things should be very strong for NIO moving forward from here. And for them, they also have significant upside and some really good news coming for us. So we go over to NIO's news that I have here for you. China's NIO to double capacity of Hefei plant to 240,000 vehicles a year. So we can read about that. So it's going to double capacity from 120 up to 240. And if we go down here, we see that after the expansion with the plant, that we get an extra with extra operating shifts, the plant will be able to make 300,000 cars a year, and that production line expansion is set to happen in the first half of 2022. So NIO should be in very good shape, especially rotating out of the chip shortage, that they should be set up very well to have just a rampant growth in production and in deliveries into 2022, which is already expected to be a big year for them. And it also turns out that we're going to be rotating out of the chip shortage most likely in 2022, definitely by the second half of 2022, according to what news reports are putting out there right now, and also concerning the chip producers themselves, that we're looking at maybe an excess supply by the end of 2022. So those are things that we want to keep in mind, that it shouldn't be something that holds back EVs anymore, and it could turn very green for EVs throughout growing market share with vehicles in general against their competition of the ICEs. So that's something to really keep in mind. NIO also being one of the tops out there. If you look at their tip ranks average analyst estimate, this one has a 72% upside according to the average analyst estimate out of the 7 ratings that are out here. So it's still trading, well, if you look, still in the mid-30s, and this thing could go up over $60 per share over the next 12 months. So that's still within 2022, and they should continue to grow from there, that they are quickly ramping up capacity, and they are expanding their battery swap stations. They also have their battery as a service where you can lease the batteries. So really awesome things that should be very good for expanding margins and filling out the bottom line over time for NIO. So NIO, also one of the reasons that I have a long position with them, and I also have some options that are out on NIO as well, looking for that growth to happen soon, and I really think that both of those things are going to do well over time. Finally, we'll go to the current EV king, and probably into the future here, the EV king, which is Tesla. And Tesla finally overtook that $800 price tag, and you can see the sort of trajectory that they're on. And I had covered Tesla not too long ago, saying that they would find significant resistance at 800, and they've just blown right through that resistance at 800 back up to 820. So I think eyes are on the future, and I think the eyes are on production for Tesla moving on from here, that we're going to see lots of really good news coming out for Tesla in terms of deliveries, production, demand, EV growth in general, and then don't forget about their battery storage that they have. There's just a lot of things going on for Tesla. So for Tesla, the good news here is that the emissions credits that they stand to receive in China, it looks like they're going to score the highest of all the different companies out of China, which is a good thing. Now, we want to keep in mind the credits, the fact that they contributed to a net profit for Tesla earlier on in the second quarter was actually something people looked at. They're like, hey, when these credits go away, does Tesla even still stand a chance? Honestly, the credits are something that I think floats Tesla for the time being, but as they continue to grow and as they finish most of the major projects that they have, like building their batteries, building their gigafactories and building their car production facilities. Like after all that expansion is for the most part done and underway, and their main thing is producing EV after EV, and then don't forget about autonomous driving, and that software part of it, in my opinion, is one of the biggest parts that we have, especially if that's something that they can lease out for autonomous driving to other vehicle companies. I think that they would pay a premium for that knowledge and experience that's in the deep neural networks and the training that's been there for the AI. That's not something that you can just easily catch up on. And even so, there's been just a lot of growth, development, and lessons learned through Tesla that I don't know that the other car companies are going to be able to catch up to them in the same way. They might be able to produce the vehicles, but as far as the autonomous driving features goes, that's something that they're not going to be able to catch up to, in my opinion, anytime soon. It's going to take years of development from those other companies, and lots of there's going to be partnerships, and there's going to be growing pains and stuff that has already been water under the bridge for Tesla and puts them just years ahead of the other car companies. I think that there's a lot going on for Tesla with that end of it. So these credits, I think, are a good thing. Let them happen for the time being while other companies have to pay them these credits for their emissions that they put out there. And, well, thank you is what Tesla should be saying. Thank you very much. We will continue to sell these to you, and we're going to continue to profit from it. And, eventually we won't even need them anymore. If we continue to get them, great, but we definitely won't need them. I think Tesla is going to be a cash cow moving forward with incredible demand worldwide for their vehicles, and also the production that is going to grow right along with it. So those are my thoughts on Tesla. Moving on from there onto the tip ranks. This is interesting. So I don't know if you've looked at analyst estimates for Tesla before, but this is one that we actually get a downside, 15% downside. There is such contention over the astronomical valuation for Tesla. The thing is that there's so much future growth expected for Tesla that it keeps people chomping at the bit and demanding more to be a part of Tesla to take advantage of some of that growth that's there. And so when you look at the valuations based on current metrics, they don't really make a lot of sense. They don't really trade as well as they should. So in one of the articles that I was reading, they compare it to Toyota, which it has about a $300 billion market cap, and Tesla right now is over $800 billion, I believe, by market cap. So that's over 2 times what Toyota's worth. Well, they just don't see that same sort of growth coming out of Toyota that they see for Tesla. That Toyota is a legacy player, and not to say anything bad against Toyota, just the growth that's expected out of Tesla, and the fact that they not only grow like a car company, but they also grow as a tech company as well, with possibly higher margins coming out of the software side of things. Like, there's a lot of reasons why it's not a direct comparison between the legacy automakers that we have and a company like Tesla that makes EVs, but is a much bigger tech company outside of that. And to me, the AI and the fact that they have their very own supercomputer and they do all of their work in-house, that vertical integration is something that, to me, really merits the current prices that we have and the forward outlook that we have for Tesla. So when we look and see that in Wedbush, Dan Ives, 5-star analyst, this guy crushes it. 78% success rate, almost 37% annual return. Like, this guy's pretty cool. So I would much sooner believe his $1,000 price tag for over the next 12 months than I would this the 0-star that is actually at a loss of 4%. That's right half the time. So yeah, we get that $300 price tag most recently 2 days ago, but I think that this is somebody who is very much for the legacy automakers. If you actually read that, he covers GM and he covers Ford, and when you look at it through that lens against the legacy players and the strength that they've had and what it took to create the sort of market that they have, yes, Tesla shouldn't be where they're at when you look at it through his telescope. But I don't believe Dan Ives is using rose-colored lenses when he gives the $1,000. I think he's looking through a more realistic lens and taking Tesla for what it is, rather than comparing it to the legacy auto players that we have in the field. So legacy-wise, Brian Johnson here is probably right if we look at Tesla as a legacy automaker. However, looking at it as the progressive company that it is, and the giant that it's becoming, the $1,000 is something that I'm more ready to believe. So let me summarize. XPeng, I think that XPeng is going to show us the mid-40s, possibly even up to $50 per share by the end of 2021. So mid to high 40s, I would say. $50 I think would be a nice limit just for the end of 2021. And after that, I think that we have, really bright green lights moving on to the expansion of XPeng. It's just a really super popular brand. It doesn't make the premium vehicles, the luxury vehicles that we would have coming out of NIO, so it's a slightly different market. However, I think that it's going to appeal to a broader part of the population in China, and also don't forget about European expansion for XPeng and NIO as well. So moving out to be more global players is really going to help them as well. I shouldn't forget that part of things. I definitely did want to mention that NIO is definitely going to go back into the 40s. I think, honestly, end of 2021, we should see a lot of that downward pressure come off and put NIO back into maybe the $50 mark, maybe even up to the mid-50s end of 2021. And, that's with that guidance switching things out for the chip shortage, the fact that we're supposed to rotate out of it so strongly and their production is supposed to spike so drastically. I really think that price is going to come back sooner than later for NIO and also XPeng. I think some of that depressed pricing that we have right now, I think we'll get more levity to those stocks, and that will help out those stock prices. Tesla, end of 2021, honestly, I think we could revisit that all-time high of 900. We could possibly even break beyond it if we get a strong movement, a strong rally from EV and clean energy, like with those coming back, and also tech and high growth rally coming into Q4 like I expect. That could push Tesla back up to 900. I mean, they're already at 820, so it's not too far of a cry, about 10% away from where they're currently at. And yes, that would be incredible, but it puts them back to where they were before. And we also have a lot of the headwinds fading away, so that a lot of the reasons for downward pressure are going away, and that's allowing this upward pressure, the bulls, to come in and really reclaim some of its territory, some of its ground that it lost in the past. So 900, I think it's absolutely reasonable to expect $900 by the end of 2021, and if we hit that $1,000 mark like Dan Ives says, because it almost never takes us that full 12 months to see some of these price targets from the companies that people are really excited about and have a lot of promise, and they are very high conviction plays. A lot of times we see those prices in the stock before we ever hit that 12 months time for the price target, and by the time we get there, we should have updated and upgraded analyst estimates for companies like XPeng, NIO, and Tesla. So that's what I have for you guys today. I hope that you enjoyed it. If you like what I have to say and like to hear more, check out that link for the Patreon down in the description. I'd absolutely love to have you over there as part of the community. Also, Moo and Weeble, sign up, deposit your money, get your free stocks, and thank you for the free stocks. I really appreciate it. Eyes wide open this time. Hit that like button very deliberately. And then also subscribe button and notification bell, ring it to see anytime that my videos come out. Remember, these videos are for entertainment purposes only. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.